Hello and welcome to Investment Insight, your clear take on the markets. Let's get started. Today we are launching a deep dive into two really critical shifts for 2026. And these are things that are fundamentally redefining assets and risk in ways people aren't really watching.
Yeah, we're moving way past the usual conversations about inflation and interest rates.
Exactly. This is about pure supply chain politics on one hand and, well, a sudden technological leap on the other. We're focusing on the politicization of silver and the shocking acceleration in the quantum computing timeline.
That's the mission. We've taken a whole stack of sources, everything from official government announcements to dense cybersecurity papers, and we've really tried to boil it all down.
Right. And the goal here is to focus on why these two shifts, one physical and one digital, matter directly to your wallet and, frankly, to the security of the whole digital world you rely on. Because, let's unpack the first one. For decades, silver has always been seen through the lens of gold, right? It's a hedge against inflation, a store of value. But the analysis we've been looking at paints a very, very different picture for 2026. It's now being framed as a strategic supply chain weapon. And the trigger for all of this seems to be in Beijing.
It is, and what's crucial here is to really understand the mechanism of control. So starting January 1st, 2026, China is implementing a silver export licensing system.
A licensing system. Most people hear that and probably think it's just more paperwork.
Exactly. But the sources are clear on this. They view it as a powerful de facto export restriction.
So it's not like they're coming out and officially cutting quotas or anything like that.
No, nothing so obvious. It's about creating a bureaucratic blockage. They control the speed, the flow, everything, all through administrative permits and approvals.
So think of it less like a customs gate and more like, what, a series of random complicated toll booths popping up on the only highway out of town?
That's a perfect way to put it. They can slow the flow of silver to a trickle without ever technically banning the export. And this administrative chokehold method, it's not new. We've seen China use it very effectively before to gain leverage, most notably with rare earth minerals.
That gives Beijing just immense leverage. But why silver? Why now? What's the strategic prize that they're after here?
The prize is the AI boom. Silver is so much more than jewelry or coins now. The data shows it's an absolutely indispensable industrial material.
You mean for things like solar panels?
For solar paste, yes, but also for the high connectivity wiring in massive data centers, for all the advanced electronics that power next-gen tech. Silver has become this critical raw material for the actual infrastructure of AI. So the analysis frames this as China deliberately weaponizing its supply chain leverage over the West.
Let's get specific on the magnitude of their control, because I think this is where a lot of people get it wrong. We're not just talking about who mines the most silver, are we?
No, and that is the key statistical point that comes up again and again in the research. While mining is spread out globally, China controls something like 60 to 70% of the global refining and processing capacity.
And that's the real bottleneck.
That is the bottleneck. It doesn't matter who pulls the raw ore from the ground. If you can't turn it into the highly pure bars and products that industrial consumers, like a semiconductor fab, actually need. So even if the raw ore is available elsewhere, China can restrict the supply of the finished, usable product.
Which really solidifies the weaponization argument. How systematic is this? I mean, did the Ministry of Commerce, MOFCOM, give any specifics?
They did. MOFCOM published an actual list. The sources note that only 44 designated companies have been given permission to export silver for the 2026-2027 period.
Wow, just 44.
Right. So this isn't a free market. It's a state-designated, tightly controlled system. It instantly turns silver from a commodity into a strategic, government-controlled input.
So the control point is clearly in Beijing. But every action has a reaction. Let's pivot to the U.S. What's the policy response shaping up to be?
Well, the first step is actually already done, which is important. The debate over if silver is critical is over. The sources confirm the Department of Interior and the USGS officially put silver on the final 2025 critical minerals list. That happened back in November.
Okay, so that designation is locked in. I get that it shifts the priority, but what does calling silver a security asset actually do to the market? Is it just a label?
Oh, it's far from just a label. The second it gets that designation, U.S. policy priorities completely flip. They move away from traditional concerns like, price stability and shift entirely toward supply chain security.
Which means?
It means a mandatory focus on building domestic refining, on aggressive stockpiling, and on sourcing from allies. And all this new policy demand, which is totally separate from commercial demand, is just inherently destabilizing. It's going to add volatility.
I understand that policy shift, but building out domestic refining capacity, that takes years. If China controls 60 to 70% of processing now, how does that help in the short term?
That's the right question to ask. And the sources agree. You can't build that overnight. That's the gap policy has to deal with right now. And since you can't just build a new refinery tomorrow, the main lever becomes trade policy.
So tariffs.
Exactly. Our research highlights that tariffs and other trade measures are a constant, predictable tool under the current administration. Silver, as a critical imported metal, is a prime target.
Which leads to companies trying to get ahead of it.
Absolutely. The analysis shows it creates this phenomenon called front-loading or preemptive importing. You can just imagine the conversations happening in boardrooms right now. Order it all, get it shipped yesterday.
Because a tariff could drop any day.
Any day. So companies are forced to pay to store it now to avoid getting hit with punitive costs later, and that puts even more immediate pressure on the market.
Okay, so we have physical scarcity from China. We have trade friction from the U.S. But if the supply shock is so obvious, why did we see silver futures prices dropping sharply at the end of 2025? Why isn't the price just spiking right now?
This is the absolute key. It's the difference between a financial shock and a physical one. And it's why the sources are pointing to mid-January as the real inflection point. What we saw at the end of 2025 was a technical financial shock. The CME hiked margin requirements repeatedly.
Ouch. So the exchanges made it more expensive to hold a position.
Precisely. They demanded more collateral. And that forces anyone with an aggressive, leveraged position, what the market calls the weak hands, to sell. They have to liquidate.
And that mass selling causes the price to crash.
Right, like that 8% drop we saw. The financial system has to flush out all that speculation first. So the market is digesting the financial risk of volatility, but the physical scarcity risk is still, well, it's still waiting in the wings.
Can we use an analogy to make that clearer for people?
Sure. Think of it like a dam. The water in the reservoir is the physical silver supply. China's new system is them slowly closing the gates on that dam. The water hasn't stopped, but it's being restricted. But the frantic selling of futures contracts, that's the financial shock, is like draining the little bit of water right in front of the dam. So we only see the real scarcity, the panic, and the big price move after that financial leverage is gone, and the slow trickle from China's bottleneck finally makes the real water level drop.
That makes the timeline much clearer. So what's the core takeaway for an investor here? You can't just model silver based on inflation and interest rates anymore.
Not at all. The new reality is that silver's price is a complex function of three things: supply chain policy, trade policy, and financial leverage. The market is set up for this clash between physical tightness from China and financial weakness from deleveraging.
So making a simple directional bet is probably not the way to go.
It's going to be very tough. The sources suggest success now depends way more on risk management, on position sizing, and on just managing the intense volatility rather than guessing the top. And companies that need silver, solar, high-end electronic, they're going to face some serious margin pressure.
Okay, let's switch gears from physical metals to digital disruption. Our second big theme is quantum computing, and the sources here suggest the timeline is moving way, way faster than anyone thought.
It really is. The most striking data point comes from people like Theresa Payton, the former White House CIO. She suggests late 2026 could be a tipping point for practical commercialization.
That is a dramatic acceleration. I mean, people like Jensen Huang were forecasting 10 to 15 years out.
Exactly. This moves the goalposts years ahead. And it's not just hype, it's being driven by real breakthroughs in error correction and qubit stability. The machines are just becoming reliable enough for real tasks.
So let's look at the friend side of this first. What kinds of world-changing problems does this let us solve?
Well, quantum lets us tackle problems that are just impossible for classical supercomputers because of their complexity. Take healthcare. Quantum can speed up drug discovery by actually simulating molecular interactions perfectly. It's a game changer for personalized medicine.
And what about outside of pharma?
Oh, huge benefits in energy and the environment. Optimizing battery chemistry, developing new materials, tackling massive challenges like carbon capture. The potential for innovation is, it's almost boundless.
Sounds like a revolution.
Yeah.
But based on the analysis, who actually gets to use this revolutionary power first? It's not going to be available to everyone, is it?
No, the research is very clear on this. Initial access in late 26 is going to be severely restricted. It'll go to the institutions with the absolute deepest pockets nations, militaries, the biggest banks, big tech.
So quantum starts as an asymmetric technology.
Deeply asymmetric. It enhances the power of the few, and it rapidly widens the gap between those who can afford it and those who can't. It's not a broad innovation, not at first.
That alone changes the competitive landscape overnight. But let's shift to the foe side of this, the security crisis. What's the major structural threat here?
The core danger is that a powerful quantum computer could eventually just nullify the public key cryptography that secures our entire digital world.
And when you say public key cryptography, you mean things like RSA and ECC, the algorithms that protect basically everything.
Everything. Banking, secure communications, all of it. For decades, that's been the foundation. A quantum computer could, in theory, break it.
Now, this sounds like a problem we can deal with in a few years once the machines are actually mature.
Right. And this is the most terrifying part and the most crucial takeaway for you listening. It is not a future threat. Sources are calling it a delayed explosion security crisis. The threat has a name. Hardest now, decrypt later.
Okay, let's unpack that specific phrase. What does that mean in practice?
It means you should assume that state actors, sophisticated groups, have spent the last decade stealing and storing vast amounts of encrypted data. Not just specific files, but entire streams of internet traffic.
So military secrets, financial ledgers, medical files.
Petabytes of it, all encrypted, all just sitting on servers, waiting. Once a powerful error-corrected quantum computer arrives, maybe in late 2026, maybe a bit later, all of that stolen data, which was protected by our current encryption, could be instantly decrypted, all at once.
Wow. So the crisis isn't about new data being stolen in the future.
No. The crisis is that a decade's worth of past secrets could suddenly become an open book. It's like a warehouse full of locked safes, and someone is about to get the master key that opens all of them simultaneously. The breach already happened. We're just waiting for the decryption event.
That's a staggering risk. So what's the response? I know governments and industry are racing to implement something called post-quantum cryptography, or PQC.
That's the race. PQC is about building entirely new quantum-resistant algorithms to replace the old ones. They're based on different mathematical problems that we think even a quantum computer can't solve easily.
And this transition,
Yeah.
it sounds incredibly expensive and difficult.
It is a massive overhaul. This isn't a simple software patch. It's like having to replace every single lock on every building in an entire city. But you also have to redesign the doors and the frames to fit the new, more complex locks. And you have to do it all on a deadline because the burglars are on their way with the master key.
So for investors, we really need to reframe this. Quantum computing isn't a simple growth story about who builds the best machine.
Yeah.
It's more of a mandated security spending event.
Exactly right. Global investor analysis suggests it's primarily a security and regulatory risk repricing event. The winners aren't just the quantum hardware makers. The sources say companies that specialize in PQC, in cryptographic consulting, in cybersecurity infrastructure, they're poised to benefit hugely because this spending is not optional. It's essential capex for survival.
And on the flip side, who gets hit with the costs?
Any company that handles sensitive long-term data, think government contractors, finance, healthcare, they face enormous PQC conversion costs that are going to pressure their margins for years. It fundamentally shifts the question from who makes the quantum computer to who has to completely rebuild their house because the quantum computer is coming.
So this deep dive has really shown us two massive, non-traditional market drivers for 2026. On one side, we have silver, which is no longer just a commodity, it's a strategic, policy-driven asset.
And that forces investors to manage policy risk right alongside financial risk.
And then on the digital side, quantum computing is accelerating the future, bringing these incredible breakthroughs, but at the same time creating this sudden explosive security crisis tied to data that was stolen years ago.
And there, the investment focus shifts to mandated security spending and who wins and who loses in that transition. As we wrap up, here's a final thought to consider. The sources indicate that what China is doing with silver using bureaucracy to control the flow is part of a broader pattern of controlling strategic metals. So, given silver is now critical for the AI supply chain, what's the next metal on their list? What other material essential for manufacturing or energy could face these same sudden export restrictions in 2026? That is the structural risk to keep a very close eye on.
Don't forget to subscribe and hit that like button.